Hello everyone, my name is Luciana Tanjaya, and today I'll be presenting my research on the impact of multinationality, tax burden, and intangible assets on transfer pricing practices among manufacturing companies listed on the Indonesia Stock Exchange from the period 2020 to 2022. So this is the overview of the presentation that we will be discussing today, and the presentation will be divided into 5 parts. Let us start with some context. The globalization has significantly impacted the global economy, leading companies to adopt proactive strategies to expand their business reach, such as extending into wider domestic territories and also venturing into international domains. In this endeavor to penetrate international markets and to fortify their global presence, many companies have established overseas subsidiaries, aiming to create various advantages for the parent company. The strategic move has transformed the local entities into multinational corporations, or MNCs. It is naturally engaging them in diverse international activities and also transactions. On the other side, taxes represent a substantial financial burden for the companies due to their compulsory nature, lack of direct benefits, and also negatively impacting the net profits. Multinational companies have also distinct advantages due to their geographical diversity. They can leverage varying tax regulations across different jurisdictions. Other than that, multinational companies usually involve in complex or artificial transactions between the subsidiaries in other countries. In an effort to manage tax obligations, companies often employ methods perceived as more reasonable and transparent to avoid accusations of tax avoidance. One widely adopted approach for the multinational companies is the utilization of transfer pricing. So, what is transfer pricing? Transfer pricing is a practice where the companies determine the transaction prices for dealings with their affiliated entities. This can be used as a strategy to manage the tax liabilities. In this study, we will investigate more on how factors such as multinationality, the tax burden, and intangible assets can motivate the companies to use transfer pricing as a strategy to manage the tax liabilities. So the previous research on the factors affecting transfer pricing practices has yielded inconsistent results, highlighting a significant research gap in this area. The studies on multinationality have produced contradictory findings. While the Riviati, Maslipa, and Mifta reported a positive relationship between the multinationality and transfer pricing, Wismaniarti, Octavia, and Setiorini concluded that multinationality does not significantly influence the transfer pricing practices. Similarly, research on tax burden has shown varied results. Rahayu, Wahyuningsi, and Wijayanti demonstrated that tax burden affects the transfer pricing. However, Kotimah identified a negative relationship. And last, the impact of intangible assets on transfer pricing has also been subject to discuss. Firmansyah and Yunidar established a positive correlation between intangible assets and transfer pricing, whereas Jafri and Mustikasari found no significant relationship. These conflicting results suggest that the further study is needed to provide a more understanding of the relationship between multinationality, tax burden, and intangible asset to transfer pricing. So, based on the research gap, this research aims to address 3 main questions. The first one is, does multinationality affect transfer pricing practices? The second one, does tax burden affect transfer pricing practices? And the third one, does intangible asset affect the transfer pricing practices? The objectives also align with these questions, aiming to analyze the effect of each factors on the transfer pricing practices. So, based on the research gap, this research is grounded into 2 main theories. The first one is the agency theories, which focuses on the contractual relationship between the principals and the agents and the potential conflicts of interest that might happen between the both parties. According to Jensen and Mackling, The agency relationship is defined as a contract or agreement between the principals and the agents, wherein the former engage the latter to perform services on their behalf, which involves delegating decision-making authority to the agent. However, conflicts can arise when there are divergent objectives pursued by the agents and their principals, each motivated by their respective self-interest. The second one, we use the positive accounting theory, which provides a framework for understanding accounting practices based on business motivations and opportunistic behavior. According to Watts and Zimmerman, this theory seeks to comprehend the rationale and the methodologies employed by accounting professionals under specific conditions to generate the financial information. To generate the financial information. The theory is predicated on the assumptions that the accounting practitioners act based on the business motivations and opportunistically to maximize their potential benefits. And based on these theories, we will explore if the research findings support the theoretical framework. Next one is our research model. Our research model considers the multinationality, tax burden, and intangible assets as the independent variables, with the transfer pricing as dependent variable. And this is the operationalization of the variables. We use a dummy variable for the multinationality, assigning a value of 1 for the MNCs and 0 to the non-MNCs. And for the tax burden, we use the ETR ratio, dividing the actual tax expense by taxable income. For the intangible assets, we assess them by dividing the intangible assets by the total assets. And finally, for the transfer pricing, we assess it by dividing the receivables from affiliated parties by the total receivables. This is the research method. The study population consists of manufacturing companies listed on the Indonesia Stock Exchange from period 2020 to 2022. We use purposive sampling and also employed various analytical methods, including the descriptive statistics, classical assumption tests, multilinear regression, and also the hypothesis testing. In this study, a purposive sampling method was employed to select the research sample from the manufacturing companies listed on the Indonesia Stock Exchange for the period 2020 to 2022. So the initial population consisted of 157 manufacturing companies that provided complete financial reports during the specified time frame. To ensure the relevance and consistency of the data, several exclusion criteria were applied. The first one is 64 companies that incurred pre-tax losses during the study period were eliminated. Subsequently, 45 companies that did not present intangible asset data were excluded, as this information was crucial for examining the impact of intangible assets on the transfer pricing practices. Furthermore, 12 companies that did not engage in related party transactions were removed from the sample, as these transactions are fundamental to the study of transfer pricing. After applying these criteria, 36 companies met the requirements and for the study. Considering the 3-year analysis period, this initially resulted in 108 firm year observations. However, to enhance the robustness of the statistical analysis, 3 outlier data were identified and removed. Consequently, the final sample of this research comprised 105 firm year observations, providing a comprehensive and relevant data set for investigating the impact of multinationality, tax burden, and intangible assets on transfer pricing practices among Indonesia manufacturing companies. Here is the research results. We did the classical assumption test, and from the data normality test, multicollinearity test, autocorrelation test, and also the heteroscedasticity test that we did, they're all passed the test. Next one is our model testing. The adjusted R-squared testing shows value of 0.03 or 6.3%, that indicates that the independent variables of multinationality, the tax burden, and also the intangible assets explain 6.3% of the dependent variable. Meanwhile, the F-test results show a significance value of 0.023, which is less than 0.05. This indicates that the model is suitable for the analyzed data, as all the independent variables jointly influence the dependent variable transfer pricing. Moving on to the hypothesis testing, we found the following results. For the multinationality, the significant value is 0.247, which is greater than 0.05, with a negative coefficient. For the tax burden, the significance value is 0.03, which is less than 0.05, with a positive coefficient. And for the intangible assets, the significance value is 0.044, which is less than 0.05, with a positive coefficient. Therefore, the multiple linear regression came out like this. Okay, this is the discussion. So the first one, we found that the multinationality does not significantly influence transfer pricing practices. This suggests that a company's decision regarding transfer pricing is not affected by the presence or the absence of foreign affiliates. This finding aligns with the previous research conducted by the Jaffrey and Mustikasari and also Agata et al. The second one is the tax burden. Tax burden has a positive influence on transfer pricing practices. This indicates that companies consider tax burden as a significant factor in their transfer pricing decisions. This finding is supported by the previous research by Rahayu and Prananda and Trianto, and aligns with both agency theory and positive accounting theory. The last one is the intangible assets, which positively influence the transfer pricing practices. This suggests that companies consider the intangible assets when making decisions about the transfer pricing strategies. This is consistent with the previous research conducted by the Firmansyah and Ginidar and also Novira et al., and also aligns with the agency theory. So the conclusion is the multinationality tax burden and also, the multinationality does not significantly influence the transfer pricing practices, while the tax burden and intangible assets positively influence the transfer pricing practices. And based on our findings, we recommend for future researchers to expand their research scope and explore different independent variables. For management, to conduct regular evaluations of the transfer pricing strategies. And for the tax authorities, to implement more rigorous evaluations of companies' transfer pricing practices. That's all from me. Thank you so much for your time and attention. Thank you.